I've been a little bit busy for the last week, but I am planning on catching up this week. So today and tomorrow, I'm going to double up on my live videos so that I can finish out November with my video challenge that I'm doing. 20 videos in the month of November. If you comment or share on the video, you will be entered to win a $100 gift card to the local business of your choice. So thanks for following along with me this month. My video today is about buyers. Last week was all about buyers. I didn't finish out the week because we're getting our house on the market, but I'm finishing up today. So how can a buyer have a competitive edge in this market? Good question. I'm going to go over some tips with you guys today that as a buyer's agent, I use on offers that I write with my buyers. Sometimes we use a couple of these things, and sometimes we use all of them. Sometimes we use none of them. And even sometimes with all of them, it can still be difficult to get under contract on a really popular property. Especially this summer. I mean, I had folks that were looking at houses that would wind up with 20 offers on them. So how do you compete in that kind of market? Um, Thanks, Ashley. I'm keeping on with my video challenge. So, number one, this is pretty obvious, but offering over list price. Yes, this is a market where buyers have to offer over list price. Whatever the price is that you see, add at least $5,000 to it because that's probably what you're going to pay. So if you're looking in a really tight price range and you know you don't want to be over, let's say 200, you can't look at a $200,000 house. You have to look at 195 or less because realistically you're going to have to offer over list price. Um, Another thing you can do to make your offer better is increase your earnest money amount. So earnest money is money that a buyer puts down on the house at the beginning of the contract. And that money comes back to the buyer at the end as long as they close on that house. But if the buyer walks away for some reason, like they just changed their mind, then the seller gets to keep that money. So a standard earnest deposit is about $1,000, and that's fine. But if you're competing against other offers, saying that you're going to put down a $3,000 earnest deposit is a lot more attractive because if you happen to walk away from that contract, the seller gets to keep your $3,000. Obviously, you wouldn't want to walk away, but that's something that a lot of people don't think of that can make your offer look a little bit better. A home warranty. So a lot of buyers ask a seller to pay for a home warranty. You could just simply not ask for the home warranty, or if you really want a home warranty, you can pay for it yourself. You don't have to ask the seller to pay for it in order to get one. So if that's really important to you and you want to make sure you have one, but you want to make your offer better by not asking them for it, then you can pay for your own home warranty. Closing in possession, asking exactly when they want to close. Instead of just guessing or doing what's best for you, and it might require some short term living somewhere. But if your sellers have a specific closing date that they want, give it to them. And possession too. It's really nice as a seller to have a couple of extra days to move out after closing. I've seen that lately on a few different contracts where the buyers have offered late possession to the sellers, and that is a really like having a couple extra days to move out is a big deal. And so if you don't have the capacity to do a higher earnest deposit, or if you don't have the budget to go over list price, you can you can let them move out later. Like you can wait 2 days to move into the house and let them have extra time, and that's a good way of making yourself look better too. Closing costs is another one. A lot of people ask sellers to pay for their closing costs. Um, that's a really normal thing. But in a competitive market like this, making sure that you have your own funds to pay for your own closing costs can give you a really great advantage because there are a lot of people out there who just have enough for their down payment and they don't have enough to cover their closing costs as well. And so they're banking on asking the seller to pay for those. And so if they go over list price, it's really just to make up for their closing costs, and they'd have to go even further over list price to make what their offer better than someone else who's paying their own closing costs. Speaking of making an offer go up and up and up, there's something called an escalation clause. And sometimes this is a really excellent tool, sometimes not so much. A lot of agents don't like escalation clauses because it kind of feels like cheating. But basically, what it is it's a document that you prepare with your offer that says whatever your other offers are, we're going to beat it by X amount of dollars, up to a certain amount. So let's say the house is 240. You can have an escalation clause that says we're offering you 240, but if you get any other offers, we're going to beat that offer by $2,000 up to 250. And then at 250 it cuts off, and they have to prove to you that they got another offer that made yours go up that high. But that way, you didn't have to offer 250 off the bat, and it helps you stay on top because you don't know how many offers or what other offers are coming in. Um, it just helps you stay ahead of the game. Like I said, a lot of agents don't like that because they just want you to, like, if you're willing to pay 250 for the house, they want you to offer 250. They don't want you to say, well, we'll only pay that if you have another one. So sometimes that can rub a seller the wrong way. A good time to use it is if you're buying a flip house, because those guys do not care. Their feelings are not going to get hurt over an escalation clause. They want the most money. So that's a good time to use it. Also, if you have extra funds, because an escalation clause also has that you're going to waive the appraised value. So if the appraisal doesn't come in at the price that you need, you're saying that you're going to pay the difference in cash. And that brings me to my next point, which is even if you don't use an escalation clause, you can also offer to waive that appraised value. That's actually, we're selling our house right now. The buyer has said, hey, whatever the appraised value is, we're going to pay over that no matter what, um, up to, whatever our sale price is. I'm not worried about our appraisal, and in most cases appraisals come back fine. But if you're talking about 20,000 over list price, which is real, that's really happening, people are getting 20,000 over their list price, um, your chances that the appraisal are going to come back low is pretty likely. And so you can, if you've got the extra cash, offering to pay above the appraised value is a really, really great way to set yourself apart from the competition, because not many people are going to offer to do that. Um, in its present condition or as is, that's another one. That's a big one. So the document that is for in its present condition has three different options. Option one is you can still get inspections done. You can still ask for repairs, but sellers have made it known they make no intent to make repairs. So that's pretty much the same as the contract, honestly, but it looks good to say, hey, we're not going to be nitpicky on the inspection. Option two is probably the best one, and if you want to be really competitive, that's what I would do, is option two. And that says, hey, we're still going to get inspections, but we're not going to ask for any repairs. We're just going to decide after inspection if we're going to cancel or if we're going to accept. And chances are, if the repairs are so big that you aren't willing to do them yourself, then it might be something that you want to cancel for, like some foundation problems or termites or something like that. And so even though it does require that you're going to have to do things like service the HVAC and fix the GFCI and all the little things that come with home ownership, um, it takes the risk out for the seller. And if you aren't quite as high on your offer price, they're going to see that you're not going to ask them for repairs, and they're going to be more likely to go with you because inspections are such an unknown. That's a really great way to set yourself apart. The third option on that is that you're not going to get inspections done and that you're not going to ask for repairs and that you can't cancel the contract. Would not recommend that one under any circumstance. Financing. The type of financing you have matters. If you can go conventional every day of the week. A lot of people think they need a first-time homebuyer's loan, which is FHA. You don't need that. And actually, if you're going to be in your house for a while, it's probably not the best option for you because there are fees associated with that loan that never go away. Now, if you need an FHA loan to get into a property, then do it, because I think that homeownership is worth it. I wouldn't say, oh, if you're FHA, don't even bother. Like that's not what I'm saying. And they're totally fine. People get multiple offers with FHA loans all the time. But if you can go conventional, it matters because the appraisal process is not going to be as stringent. The loan approval is not going to be as stringent. There's just a few extra hoops to jump through when you're getting a government loan versus a private loan. And if you're doing conventional, it matters if you have 3% or 5% or 10% or 20% down. I had a buyer recently who made a multiple offer situation, and they weren't even the highest offer, but they were conventional buyers with 20% down, and the sellers really liked that. The other people had way less money to put down, and they felt like maybe they hadn't prepared for homeownership as much, and so they went with my people because their financing looked way better. Um, Again, if you can't do 20% down, if you can't do conventional, if you can't do your own closing costs, that doesn't mean that you still can't buy a house. We're talking about 12 other things here that you can do to make your offer advantageous. Um, Speaking of financing, though, it matters who your lender is. If you have a bad lender, if this agent has worked with your lender before and that lender sucked, they're going to tell their clients that. They're going to say, hey, I've worked with this lender and I hate them. And they're probably going to mess it up. And then they're not going to go with you. So you need to make sure that you're working with professional people who have a good reputation, who've built rapport with agents in the industry. Bank of America, not a good choice. Quicken Loans, not a good choice. Local lenders, great choice, especially if they're ones that are well known within certain brokerages. Um, Also, with financing, you could do contingency or non contingent. And this is a big one. A lot of people have a house to sell before they can buy. And it's so tough to not know where you're going to move. But when sellers are looking at 5 offers and 3 of them are contingent and 2 of them are not, they're going to look more seriously at the ones that are not contingent. So if there's any way for you to remove the contingency from your offer if you have a home to sell, whether that means selling your house first before you go buy another one, or rearranging your financing in such a way that you can own both houses at the same time if absolutely necessary. Obviously, you'd rather not do that. But if you can remove the contingency from your offer, then that's obviously preferable. Um, and then also a personal letter. That's another thing you can do is write a letter saying why you love the house, really chum it up, like, oh my gosh, your table is beautiful. That's not coming with the house. It doesn't matter, but people like your ego stroked a little bit. So a personal letter is great, and it provides a connection. Um, and if you can connect with someone, I've had a seller take a lower offer because they liked the people more, because they wrote a personal letter and they wanted to sell it to them because they had daughters that were going to play on the playset. Like that happens. So personal letters matter too. But last but not least, the number one thing that you can do to make your offer advantageous to a seller in a multiple offer situation, a buyer in this tough market, you need a good agent. You need a good real estate agent because there's a big difference between agents who are good at their job and agents who are not. I think the statistic is something like 20% of the agents are doing 80% of the business or something, and there are a lot of agents who only sell a couple houses a year, and you can kind of tell when they get thrown into these multiple offer situations, like they don't know all these tips and tricks. Like their contract isn't going to be filled out quite right, and there's going to be mistakes on it, and they're not going to communicate very well, and all those things make an impact on the listing agent, and the listing agent will share that impact with their sellers. I've done it. I said, hey, this agent is not very professional. Or the way they put their offer together, I can tell that they don't know what they're doing. Things like that. And so making sure that you have an agent who knows what they're doing, who is going to work for your best interest, who's extremely professional, who can communicate well with the other side of the transaction in an appropriate way. Like someone, you don't want someone who's going to bother them and make them super annoyed and not want to go with you because of that, because there are those too. But you need someone who knows that balance and that finesse and how to present an offer in such a way that that agent wants to work with them. Because that's a very real thing. If the agent wants to work with a certain other agent or other buyer, they can steer their listing that way. Like they can advise their sellers like, hey, here's why these people would be good to go with. I had a situation this summer where there were multiple offers. We wound up going 20,000 over. We used a ton of these tips and tricks that I just talked about. But ultimately, the agent said what got them the offer was that she wanted to work with me. Because out of all the agents who had submitted things, she knew that I was going to get the job done. And that matters. So those are my 2 cents. This is my longest live video yet. I'm sorry, guys, but there are a lot of ways that buyers can set themselves apart in this market, and that's my number one excuse that I hear when people say, "Well, I would sell my house to get the equity out, but I don't know where I'm going to move." Guess what? Houses come on the market every single day, and if you have a good agent who can get you into the house that you want, it's a stressful process, but it is doable. There are homes that are to be sold. And if you have a good agent and if you are a good buyer and you're willing to do what you have to do, you can find a home even in this market. So, um, participate participate in my video challenge. and call me if you need real estate help. That is all I have for you